Welcome to another episode of Mark's Mortgage Guide. And here we'd like to answer any questions that people have in regards to buying and selling real estate. And we'd like to keep our podcast down to a link that you can get in the car and drive to work or home. And you'll get a question answered that you may have. And so this week, I wanted to shoot a quick video, and I'm thinking of having a title rep come join us in the coming weeks to really go dive deep into title policy and what they have experienced and different maybe real life lessons that they could share with our listeners about maybe an awful story about it, why you need it, and what good is it, and all that. But this episode is going to be very short and sweet. Going to let you know what it does, why you need it, and how much it costs. We'll go over all of that. And as normal, this is very informal. I'll always make my notes and look at them on my right side here. And so today's title is, what is title insurance in real estate? And the basic answer to that question is, it is protection for you and the lender on the history of that property. So whenever you have a mortgage tied to that property, when you're buying it as a buyer and you're getting a mortgage on top of that, or to buy it, the lender is going to require that you get a title policy. And then you have the opportunity to buy what they call an owner's title policy. So there's a lender's title policy and an owner's title policy, and it basically protects you for anything that may come up on that property after you purchase it. So what the title companies go out and do, and they will go out and do what they call a title search. And so what a search is, they actually go back out from the last title policy, and they will check to see, is there anything in the history of this property that is going to prevent me as a title company from issuing you, the lender, and you, the borrower, a clear title to this property. Because you certainly want a clear title to this property to make sure that you don't have any back liens or back judgments or anything like that that may be lurking out there. You don't want to be responsible for that, since you didn't own the property at the time they may have been put on the property. So tax liens, mechanics liens, things like maybe a roofer did some work on the property and they never were paid by the seller. Maybe a plumber did some work and the seller never paid him or her to do that work. Tax liens on the property. Maybe there's a property tax liens because the seller never paid his back taxes on the property. I've seen judgments from past credit card debts that were significant in amounts, and so that credit card company will go put a lien on the house itself to recover their lien that or their loan that should have been paid through the credit card payments. Now, I don't see that a whole lot unless the amount gets to be pretty significant. HOA liens on the property can also show up on a title search. I'm trying to think of some clerical errors that they may have uncovered. So those are the main things that that it looks for. Now, they will also um, uncover any clerical error, like I mentioned. It will also look for past ownership. Who actually owned this property previously, and did they have the authority to sell it to you? I've seen some stories, and you have as well, on the news, in the newspaper, if you still get a newspaper, but uh, where people will have purchased a home and they come to find out they bought it from somebody that didn't even have the authority and the right ownership rights to sell the property. Also, have seen this to where maybe a family, their mom or dad passes away, and they pass the property to a child, and come to find out the husband had an affair uh, 15, 20 years ago. He's now deceased, and now a new brother or sister comes into um, the mix of things. And now that person comes up, he sees that his dad owned property from 15, 20 years ago, and he wants his portion of it. So they may come back into the picture and say, hey, my brother that he didn't know about me, he didn't have the rights to sell this property. So um, man, it can give you a lot of headaches to have to take on that type of situation on your own. So I can't express to you how important it is to get a clear title to that property. If the lender is going to require it, I don't know why you wouldn't require it, because you just never know if someone had work done on the property and they just didn't pay that person that worked on the property. Um, maybe somebody did some, maybe put a pool in, and they never ended up paying that pool company, and so now the pool company puts a lien on the property that you won't know about until the title company does their title search. So super important that you look at doing purchasing that for yourself, um, on top of the lender's policy. Now, who pays for them? Well, on a purchase transaction, the seller typically pays for the lender's title policy in the state of Texas. So, like I said, there's two lenders and owners. The seller normally pays for the lender's spot title policy because, like I said, it's checking the ownership from the time they purchase the property until the time they sold or selling the property. So that's typically about 1% of the sales price that the seller will be required to pay. Now, in the markets to where the super hot market, the seller may say, "Well, I'm not paying anything because I have a list of buyers here that want to buy the property, and this buyer doesn't require me to pay the lender's title policy, where this one does, and so I'm gonna take the offer that says I don't have to pay the title policy." Um, Now, in a market like today, it's more of a buyer's market, and so we see a lot of sellers paying for things that they typically will not pay. They'll be paying for points, and they'll pay for surveys, they'll pay for appraisals, but and then they'll pay for the title policies. But typically, in a balanced market, the seller is going to pay the title policy anyway. Now, we've had other podcasts where we let you know that everything is negotiable. If you are in a situation where you're in a kind of a bidding war with somebody, maybe you offered to pay the title policy. It's up to you but that'll be something that you need to talk to with your realtor, um, to see if maybe that would make your offer, more attractive. But normally the cost of that is around 1%. Now, the owner's title policy will vary depending on different things. So I would encourage you to reach out to the title companies that you may know of, or if you have a question for us, we can maybe direct you to a title company, um, and let you, or let you know about how much that owner's title policy is going to run. Um, what happens without a title policy? There's significant risk after closing. Like I said, you don't know if there's been a back lien on there that you just don't know about. So it's super important. Ownership disputes that could come up down the road, legal expenses that you would have to pay for out of your own pocket if you don't have this coverage. Um, and then my last point on title insurance is I get a lot of questions on, is this the same as mortgage insurance and hazard insurance, or something like that? And it's important that you know that each one of those are three different things. Title policy has to do with the ownership of the property, the history of the ownership, and this make sure if there's any liens on the property, like I've thoroughly discussed today. And like I said, I think I'm going to have a title office come visit us and be a guest on the podcast to give more detailed information about a title policy. But hazard insurance has to do with maybe you had a windstorm, or your roof has a leak and it's messed up your interior, and it's messed up your floor, and maybe there was a theft. That's what hazard insurance is. And then mortgage insurance is if you put down less than 20% on a loan, you're going to have mortgage insurance. And the mortgage insurance, and we'll have to do a separate podcast on that. But mortgage insurance, in a very quick um, description and explanation, is it protects a lender in case you default on the loan. So keep an eye out for a new podcast on that subject. But three different things. Today's the podcast is on title insurance and the importance of having that, and the peace of mind that you will have once you close on that property, that you have a clear title, and you're not going to have any issues going forward. And if you do have issues going forward, that's what the title company does for you. It fights the situation on your behalf. So I'm not giving any legal information here, or legal recommendations, and so be sure and contact a closing attorney, a real estate attorney, to get all of your legal questions. I'm simply trying to answer basic information or basic questions, on what a title policy is, what it can protect you against. Um, people selling the property that maybe it's not even theirs. Um, Maybe they've done the fraudulent documents, and they're trying to sell the property that they don't even own. So all of that is things that certainly can come up after you purchase and close on a property. So anyway, hopefully that answers all your questions on the title policy. And if you have any other questions about it, certainly give us a call. We can route you in the correct direction to have those answers given to you. But be sure and like, subscribe, share this podcast. There's so many different other topics that we have discussed on this podcast. Thumb through the podcast and see which one pertains to you, and hopefully we can answer those questions. But please like, share, subscribe, and we always enjoyed answering the questions. So if you have a question, give us a call or drop us an email. My email is mark@nextstephomeloans.com. mark@nextstephomeloans.com, or you can give us a call at 832-504-9014. And we really appreciate you joining us today. And we'll see you next week on Mark's Mortgage Guide. Take care, everybody. Bye-bye.